It's me, Danielle J. Mitchell, your up-and-coming queen of real estate, and I'm here for another episode of Tuesday Tip at 2. All right. Hello, everybody. Hello. Hello. I am here for today's and this week's Tuesday Tip at 2. So if you can recall, we have been doing a series on what to look for. Okay, what to look for. And in that series, we've been going through some different scenarios of what to look for. Listen, if you haven't seen some of the past episodes, I need you to go and check it out. Go in the archives and check it out. And today, we're going to be talking about what to look for in a mortgage lender. Okay, what to look for when you're shopping for mortgages. Now, before I forget, it is me, Danielle J. Mitchell, your up-and-coming queen of real estate, and I service PA and the surrounding suburbs, PA as in Pennsylvania. So if you are local, I would love to help you. I would love to service you. And this is what I need you to do. That right there, I need you to go up there and look at it. And I need you to do what it's saying for you to do. I need you to subscribe. I need you to like. I need you to comment. I need you to share. I pretty much need you to do all the things on there so that my algorithm can be amazing. Okay, that's what I need from you guys. Thank you to all my new subscribers. Thank you for all of those who have signed up to get all the notifications. By the way, if you have not done that, you need to do so. But thank you for signing up for all the notifications. Okay. So let's get into the different lenders that you can choose from. And I really want to say one tip really before we get started is that when you are choosing lenders, I say that it's best to use a mortgage broker, mortgage lender, somebody who does mortgages only rather than your bank. Why? Why? Because a lot of times with banks, in my experience, and I spoke on this before, their guidelines are stricter. A lot of times they are just not very responsive because they are 9-to-5 jobs and salary and all those good things. So when we're out looking for properties in the evening time, you can't get them on the phone. When we're out looking for properties during the weekend hours, you can't get them on the phone. So one thing to remember as it pertains to getting a lender is really you want to utilize a lender that is a broker, number one, and solely. A lot of times people will use their credit unions, their current banks and things like that. And I have not had the best experiences in working on a transactions with banking institutions. And I will tell you, one of the things when you're putting in offers, there are other realtors who have had the same experiences as me. And when you're looking at a multiple offer situations, a lot of times just a regular lender or mortgage company pre-approval will trump a bank pre-approval. A mortgage broker is going to give you the time and attention and care that you need because guess what? Like me, they're based on commission. They're based on a transaction getting to closing. And so that's their motivation, right? And when they're getting you pre-approved, they're going to give you numbers that will get you to the finish line, not puff anything up or not. And also they have access to different programs that can really help you. So, we're going to get into some of those different things as we walk through what to look for, right? How do you compare? How do you choose between lenders? So remember that you can always shop for mortgage companies. And a lot of times people be very concerned about doing that because of credit score. Listen, the credit bureaus recognize that you need to shop for a mortgage. So the hit that you think is going to take if you use multiple mortgage lenders to go looking for who you want to use is not what you think. Number one, most times your credit score doesn't even drop. If it does, it may drop less than 5 points, if that. So just take note to the fact that when you're shopping for a lender, it's not going to drop 5 points for each time your credit gets hit by a mortgage lender. It's not going to do that. They're going to see it as one hit to your credit instead of multiples. Now you'll see the individual lenders that have looked at your credit, but it's not going to be like 5 points per lender. It'll be like maybe a drop a point, if that, if any change at all. Okay. So I just want to make that abundantly clear. So when you're shopping around for these different mortgages, you want to make sure that you are comparing interest rates. Okay. So based on your credit score, you're going to get a certain interest rate. So of course, when you are talking to lenders, you want to see what's the best interest rate you can get from somebody. But that's not the only thing. You also want to check for your estimated closing costs. What is that going to look like? If you're pre-approved for $350,000, then what are your estimated closing costs going to be? Another thing you want to check for is what your down payment is going to be. If you are able to get a pre-approved for a certain amount, but you have to put down 10% of money that you don't have, that's not a good thing. So you want to make sure that you are able to put down as less of a down payment as you want, or if you do want to put down a big one, what are your closing costs going to be? Meaning, what money are you going to need at the end of that transaction? What fees do they charge, right? Honestly, I don't know if I would necessarily ask a lender the different fees and stuff, because that can get really complicated. Once you start getting engrossed in those numbers and stuff, it can get a bit confusing. But what I will say is that when they send you a pre-approval letter, tell them to send you a worksheet estimate or estimated closing costs or something with the term worksheet in it. And 9 times out of 10, they'll understand what that is. It's going to give you an itemized what your closing costs would look like, what your mortgage payment would be, and what your closing costs will look like. I will get that from all the different lenders and just compare them and see. So you're going to compare the interest rate, you're going to compare the closing costs and all those different things. Another big thing that you want to ask about is a mortgage rate lock. Rate lock means that whatever the interest rate is that particular day is the interest rate that you'll get out of the duration of you looking for a house and or when you're under contract for a house. You want to lock that rate in. So if something happens with the housing market and interest rates shoot up, you get to keep that same interest rate that you locked in. You do want to ask about the requirements for the rate lock, because sometimes what if you need to extend your closing date? If they have you locked in at the closing date and don't give you any more time, that's not a good thing. You don't want to have to pay an extra $100, $200, $300, however many dollars just to extend your closing date a couple days or a week. Maybe you want to get the mortgage with your spouse, or maybe you don't. A lot of times what happens is married couples, or even father-son relationships, father-daughter, mother-son, familiar relationships. You want to add somebody to the deed, but they may not be able to be on the mortgage, or you just don't want them on the mortgage. One of the things you want to ask them is it going to be a problem if I add my relative or my spouse to the deed? You want to ask them that questions. A title company is typically fine with doing that process because it's very easy, but a lender may or may not be okay with that process, or they just may require some things from that particular person who's going to be on the deed. Another thing you want to ask is, do they do a pre-approval or a pre-qualification? A pre-qualification, lender asks you some questions, your credit score, your assets, all those good things, but they don't verify anything. With a pre-approval, they verify everything. They get your W-2s, your bank statements, your tax returns, They'll call your employment. They'll do all of these things, your HR, and to make sure that everything that you're saying is absolutely true, which gives you the higher chance of being able to get through a transaction and ultimately to closing. You want to ask the PMI, right? PMI, private mortgage insurance. So it's usually the same if you're getting an FHA loan, but if it's a conventional, it might vary. So you want to ask them, how much PMI would I have to pay per month within my mortgage? You want to ask about early mortgage payoff or prepayment penalties that could happen with the life of the loan. A final thing that I'm going to say you want to ask for, which is huge, you want to see if they have any programs to be able to help you. Depending on your situation, whether you have a whole bunch of money in the bank or not, if you are a first-time home buyer, you want to see if they have programs that offer for grant assistance, whether they know about some locally and can help get you through that process, or whether they have some packages that they have access to. You want to make sure that they're getting you the best. The other thing you want to ask along with that is if they do mortgage points, if they do lender credits. These are things you want to ask, again, depending on your situation, depending on how much money you have on hand. You want to make sure that you're getting as much help as possible. And that's a great reason to call different mortgage companies, because you want to make sure that you're getting the help, that they have access to the help that you need. Not every lender has access to different programs. So this is one of the reasons why you want to shop around, why you want to give them a call, why you want to ask these kinds of questions, because it will put you in the best situation to be able to pay less money. You want to be sure that grants can or cannot be combined. Some grants can be combined depending on where they're coming from, and some grants cannot. So you want to also ask the lenders about different grant programs. Lastly, you absolutely want to make sure you just simply gel with the lender. You want to make sure you want to be comfortable with them. You want to make sure that you gel with that lender. Sometimes it's not about the numbers, but sometimes it's just about, hey, I feel comfortable doing this. I feel comfortable getting through this transaction. For most of us, it's going to be the biggest purchase that we ever make, unless we just go ahead and get another house at some point. But buying a home is a process where you want to be comfortable with the team that you are building. Well, that's all for today's and this week's Tuesday Tip or Two. Listen, if that helped you, I'm glad. Please comment and share and like and do all that good stuff. And if you are interested in buying or selling, I need you to click the link down there. You know what it is. book.djmrealtyco.com. Again, that's book.djmrealtyco.com. And we can get you started on selling your property and or buying. Remember, there's no place like home, no place like home buying, and I'll see you next time. Bye. All right. Hello, everybody.